We are here today just to get a better understanding and overview about what is your opinion as an investors regarding the industry, most precisely the hospitality or the hotel industry, as you are big players and you regularly invest and manage asset or this kind of asset. But before we start our discussions, and most probably you will have the opportunity to present us more in details quickly what is the scope of Swiss Life and how many assets do you have, and then we're gonna jump in an exchange about what is your vision and your perspective about this industry. I'm happy to start with a quick snapshot about the situation, looking at the hotel trends and hotel performances. So let's jump straight forward to the what happened on the supply side. This slides presents how much of the hotel were still in operation after mid-March, where we see that Germany, Netherlands, they were almost at 38% of the supply were open. Doesn't mean that they were full, of course, but still they had remained open, while Belgium and France were more to be about 20% of the supply, and the situation was definitely more complicated in a way when it comes to Spain and Italy. So this is on the supply side. So most of the hotels were kind of closed. Those who were open were more likely to be the budget and economy segments in those countries. So let's look more in details at something which is rather more painful, which is the performances month by month for those key European markets from January, February, March, April, and May. Obviously, April and May were very distressed or depressed in a way. We all know that the situation is pretty unusual. I won't be much longer on that point because I guess since 2 months everyone listen all day long to news and information about that. So, but what it gives in terms of trends and data on the hotel industry in Europe. So we see that it's major drop. No point. March were already very distressed. Where most of the European hotel market were about or below 60% decrease in business, and of course April and May so far are still very are almost closed with no business. Hopefully it's going to change pretty quickly. Now if we look at since the beginning of the year, then again on the monthly basis, we see the situation is almost the same everywhere. So I won't go very long, just to see how complicated it could be when it comes to the occupancy, so the demand. We see in Italy everything is almost closed, and the demand we have for those hotels that we saw previously that were opened during that time is very low. We have a very low occupancy rate. I have the data in the previous week when it started to be more close than 10%, 15%. So we see a small catch up that arrive. So I suggest now that we just make a step back and we try to look at the broader angle. This is the main indicators from demand with the occupancy change, the price with the ADR change, and the RevPAR, which is a combination of both in Europe. So let's look at the cycle now from 2000 to 2019, because there is some two interesting touch points to look more in details. First, it was the financial crisis, 2008, 2009. So we see clearly the impact that it has on the RevPAR in Europe. So there were a drop of 0.2%. While the other crisis that we had in 2001, 2003, which is 9/11 in the US, the internet bubble at that time, the GDP downturn was less important in 2001 to 2003 than it was in 2009 or 8 and 9. And obviously, both were more limited to what it could be in 2020 and even maybe in 2021. So probably one other crisis that it's worth to mention is the one 91 in the US, 93 in France or in Europe. That was a more similar crisis at some point for two reasons. First, the drop of GDP was one of the highest that we have in our historical data. Then again, nothing to compare to what we're probably going to have in 2020. But what is quite interesting is that after 93 crisis, we had some inflations. So of course, no one knows really what's going to happen, but probably this scenario with a quick deflation and then probably a bit of inflation it could be similar to what we had in 93. And what happened regarding the supply at that time, we have the whole market that has been restructured through the international brand or even regional brand, standardized hotel, mostly on the budget and eco segment. And this has created a new kind of supply with new concepts answering to the market. I'm not saying that this is the same kind of concept and a renewal of the supply that we're going to have now, but it's just a quick thought to keep in mind and see maybe in 5 years' time when we're going to be able to analyze the situation, we're going to see if it has turned to the same story. So then again, more in-depth analysis, if we had also the terrorist attack in Paris and Nice and Brussels also, but this is information for France because we could see more in details the impact of the Paris attack. So then again, we have the economic or financial crisis, terrorist attack, which is nothing to compare again with the pandemic, but as we didn't have so far some pandemic to analyze, let's try to see what could be somehow a bit of similarity between those crash or make some crash tests. We see that anytime it's quite of a sharp drop. It lasts probably 12 months in a rolling period, and then we have a good recovery. As we can see here for France, or maybe we'll go quickly back to the European figures. Here we had almost 12 years of RevPAR growth on the market, so it was quite interesting. Now let's look at the discrepancy in terms of market dynamics. Still on the top line, still on the turnover, because it's the RevPAR, and we take 2000 as the basis of the index. So if we start in 2000, so we have a long cycle there, almost 20 years. We see the blue line is France, who has always shown to be very resilient. In this very long cycle, France is doing quite a good performances. We see here the quick boost of the Olympic Games in the UK, in London. Maybe we can still have this in mind for 2024 in Paris. That is the next Olympic game that France will host. And then we can see anytime we have this downturn, the resilience we have on each market. And we see that Spain were almost coming back. We see here the impact on Belgium and France regarding the terrorist attack we had in 2015, 2016. And we see that almost all those countries had well recovered, except from Italy. That could be an interesting point. I will ask if Johanna have some asset in Italy, because that's a good question. Maybe it's all about being 15 minutes in advance and not too much on this market. Otherwise, it might cost a little bit. And to conclude this first look at some data to give some light on the situation, we could look at the only kind of pandemic we had so far, which is the SRAS. I have two examples here, France and UK, where we didn't see so much of an impact. I think it's important to keep in mind that in 2003 we also had the Gulf War, the internet bubble, and the SRAS. So it was very grateful year at some point. So who could really say what is the impact of each of these situations, the internet bubble and the SRAS and the Gulf War, the second Gulf War? it's a bit tough. But then again, we saw that the recovery was quite strong. It lasts for a couple of months, and the market were back to positive trends quite quickly. And it's exactly the same things in Germany or the Benelux. In the Benelux, it was more linear. Probably this is what we're going to have this year, or with this pandemic, something a bit more linear, except if we have some kickback on the virus side. And then for Germany, we saw quite strong resilience. This is usually what happened with Easter holidays that make a switch between May and April, or March and April every year. So that was a quick touch point with some market data. And now I will let Johanna give us some maybe quick introduction about Swiss Life, the scope of your portfolio, where you have assets, so everyone knows exactly what Swiss Life is doing, and then we'll go with a few questions.
Okay, thanks. Swiss Life Asset Managers is a wide pan-European asset manager for managing assets that are owned by the insurance company, also for third-party asset management. The group manages about 225 billion euros of assets through Europe. And Swiss Life Asset Manager, the platform, the French platform based in Paris, manages 17.8 billion euros of property assets, out of which hotels represent about 9% of the portfolio. So a little bit less than 2 billion euros of assets hotel assets under management. We are invested originally in France since 2014, and we have expanded and spread out to the rest of Europe since 2016. So now we are invested in Germany, Italy, and more recently Spain. So now, once we've said that, I think since the beginning of the lockdown, we've been in a status quo situation. Clearly, we believe in the fundamentals of the hotel asset class. We have believed in this asset class for the past 6 years, and there's no reason why this should change. Clearly, the crisis that we're going through is like a huge shock that no one could have expected, and the consequences for 2020 will be huge. But on the long run, we still remain confident when it comes to this asset class. That's why, I mean, we think that the situation is clearly frozen for the moment. That's going to last, I don't know, a couple of months. Actually, what's really frustrating is that 2020 was starting pretty well. And you mentioned a whole lot of crises which happened in Europe for the past 20 years. But in France, we've been highly affected because after the terrorist attacks, we had a whole lot of social crisis, which highly affected the Paris market in particular. But the 2 first months of this year were pretty good. And we even had on certain of our hotels in central Paris, had RevPAR increases of about 25% by the end of January, February. So, I mean, it was starting with, we had high expectations when it came to 2018. So that's why the frustration is huge. And then the first weeks of March, we saw the crisis affecting the occupation rates like drastically, and that concerned both domestic and international customers. So quite naturally, it led to a huge wave of close down all our hotels in France. But it's important to say that in France, there isn't a decree for closing down hotels. So that's a specific situation in France, which we didn't have in Italy or in Spain. So the hotels are closed because there's a specific decree requesting that the hotels remain closed. Okay? So that's why you have a little bit more activity in France when we're looking at your figures, Vangelis. There's a little bit more activity on the hotel sector in France than we see, for instance, in Spain. So that's normal because some of our hotels were requisitioned to accommodate medical staff. For instance, in France, our initial portfolio, about 1/3 of our hotels remained open during the lockdown. Occupations were very low, but we had out of 40 hotels, I think we had about 15 remained open. So,
yeah, of course, you're right to mention that technically speaking, there is no law that states the hotel should be closed. Only the food and beverage part of the activity, the accommodation, it's still allowed to operate in many countries except Italy and Spain, or mostly Italy and Spain. But just before we go more to the perspective, I guess the idea that Swiss Life had when starting to invest in this kind of asset, in the hospitality asset, probably were seeking a kind of premium regarding the yield compared to other profile or other type of asset. Now, if we have to reassess this initial strategy, I think the COVID has been the best IT manager all over the world. He has pushed all corporation and company to adapt in the digital tools. So probably we all made our digital revolution internally. Obviously, I guess that was the case. So what about the premium yield we have on the hospitality industry if we compare still to office spaces that were almost coming back? If we see in downtown Paris Central or big cities, there were a kind of caught up in the dynamic of the office rent or the office market. If you have to reassess today your strategy or the way you look at the hospitality industry, what you will update in your mind?
It's a lot of questions, and unfortunately, I'm not sure we have all the answers at this stage. Clearly, I mean, we've been investing on the hotel segment and others, not only the hotels, we're also very active in healthcare and housing. So it's all sort of secondary property assets, which we really believe in, and we think that they're a good element of diversification for institutional portfolios. Now, the question is to see how the sector is going to be impacted, how hotel investors will be impacted. Firstly, there are two aspects that we need to look at, and the first one is a drop in income that we're going to have to go through, and we're going to have to live with that for the next few months. And then the second aspect is possible repricing and the possible correction of appraised values. So that's a bit an issue, but there again, it's a little bit too early to establish realistic scenarios, because it will depend on the duration of the pandemic and and the length of the recovery. So it's a bit complicated, but clearly when it comes to our strategy, we still believe in the diversification, source of diversification that hotels can represent. And we still believe that the fundamentals on the long run are good. Okay? So there is a huge crash, but honestly, the shock is huge, not only for hotels, it is huge for retail. It's also quite important for office. I mean, we're highly exposed to offices, clearly, and that's our most important sector we're invested in. And we're having discussion on such a number of our tenants, even in our office properties. Okay, so it's not just a crisis which is affecting specific sectors such as retail and hotel, because I keep hearing everyone in all the papers that retail and hotels are highly affected, but honestly, I don't believe that they're the only sectors that are highly affected. So I don't know if that answers your question, or if you want me to go a little bit further. Vangelis, tell me. I can't hear you.
Yeah, sorry. I think no one has really a crystal ball, neither myself or you, and we cannot really find out what the future and the perspective will be. But it's all about the fundamentals. We see that retail was already on the direction of probably revamp the business models, or switching to other kind of business. Office space also, we saw with all these co-working trends, that probably something was vibrating in how we should address the office market. Doesn't mean it has no future. It means that it has probably to revamp something in the business model. But let's get a bit closer with the present, because at the end of the day, you have a strong partnership with the operators. I think every situation should be faced clearly. There is a part of the model is to get rent, to back the yield on the rent. And according to different countries, mostly across Europe, but even worldwide, the question toward how we can smooth the weight of the rent has been an open discussion since a few weeks between owners and operators. Can you share a bit of experience with us, or where you stand? I'm sure there is no solution easy, but probably you can give us a bit of light on the topic.
Yeah, sure. Yeah, no problem. Clearly, at the moment, we are assessing the situation for all of our hotels, all of our portfolios in all the countries. The situations are very different from one country to another. Some countries where you have full lockdown, and some where you have hotels which have remained open. For instance, we're not going to have the same type of discussions with our hotel operators in Spain and our hotel operators in regional France, for instance. So for the moment, we're in an assessment situation. And to be very clear, we have agreed, and that we've generalized that to all our tenants, have agreed to postpone all the rent payments for the moment. But that's not a taboo. That is something that we can say, and I think all the hotel owners, landlords have all accepted to do that. So that's the first support measure, but it's a very short term, I would say, support measure. Now, what we need to see is how we're going to support our tenants for the next 3, 6, 12 months. And that's crucial, because it's not just a question of freezing, of postponing 2 months, 3 months of rent. Unfortunately, I'm not certain that that would be sufficient. Once we've said that, all the actors need to play their roles, okay, and that's meaning banks need to play their role, insurance companies, and of course landlords. But I think it's a question, each one has to play its game and has to support. But the landlords are not going to support the whole system. There will be an effort which will need to be done by all the actors of the sector. But clearly, the position of Swiss Life asset managers for the moment is to support on the long run. So clearly to postpone the rents for the moment. Once the hotels have reopened, we will assess the capacity of the tenant, so-and-so tenant, to pay the rent which has been postponed or not. Okay, so no decision is taken at this stage, but it's not impossible that we will have discussions when it comes to rent cuts. But that is not a decision that we're able to take at that stage. But I can't imagine, to be very honest, I can't imagine that we are not going to have that sort of discussion in the next coming months with certain of our tenants.
Yeah, I remember.
But even then, I mean, if rent cuts were to happen, it will happen. We will see. But it's very probable that we will have rent postponements, which will be on quite a long-term period, and then we're going to probably agree to repayment schedules on a long-term repayment schedule.
Okay.
We're long-term investors, so we can't catch up what we've lost right now, that's for sure, but we're invested for 5, 10, 20 years. So I think it's better if we find a sort of long-term solution to come to support our tenants. I think it would be, I believe that it would be the best solution to take. Okay.
I remember in the previous crisis, in another discussion or panel we had, this relation was judged as the operator strategy being asset right, then asset light, and everyone saying that no, we are getting toward asset fight. So from what I understand from you, we're not yet there, and everyone has a more responsible outlook to the situation, and probably that will help. I think if we do understand that we are all in an ecosystem that is nourishing the relation of everyone. I have I think the way the different countries has reacted to this crisis and how they have been supporting the industry, being globally the overall economic industry, but specifically on the tourism industry, there is a kind of Marshall Plan that is discussed at the moment in Europe at the European level. In your investor shoes, when you look at the situation of the different country, is there any kind of country rating toward tourism that you will now take into consideration, how they support the P&L account of the hotels, how they try to relaunch the industry? Did you start really to look at that angle that is pretty new now on the market? Is the state with its political involvement is changing a bit the game in terms of the yield for an investor perspective?
Yes, possibly. But there again, it's still too soon to give you the investor's perspective on that aspect. Generally, the support that we're seeing in all the countries is pretty well perceived. So that's, I think that there's been incredible support, and in all the countries, at least all the countries where we're invested. So that's good news, and that should definitely help for the recovery. Now the real question is, from one country to another, I don't know if it's really the way the governments are supporting. It's how the traveling is gonna come back, because we know that our European markets are quite different. Their factors are a little bit different. They're not reliant to the same type of traveling. Some are very reliant to international traveling, others to more domestic. So I think the question is more how and when we will be able to travel again.
Now, of course, the state maybe is going to turn as a new collateral in terms of investment. We all know that it's a cyclic activities or a cyclic business. And when it came to investment, I mean, more likely to be the capex, how we maintain and how we update the concept and the product when it comes to the hospitality industry. One of the key fears or something that every government try to avoid is that we miss a cycle in terms of investment. If we have some degraded cash flows coming from operation, if we have compressed yield from the investor side, how you believe we will be able to catch up as we used to be with the investment cycle in the industry, how we will be able to update, most probably because the behavior of the clientele will change, how we will be able to continue this investment cycle in the properties?
Yeah, it's a good question. Each time we have these big shocks, we have to rethink how the whole system is gonna change. And I think it's important to stay very focused on what are the necessities in terms of capex on our properties. So clearly we need to be very, very focused on that, and we mustn't lose track on the fact that hotels need to continue to be renewed, revamped, etc., and need to we're going to face a huge change in demand, and the hotel assets and the hotel operators are going to need to adapt to that. And the change is now, and they are actually all thinking about that. And actually, when you talk to all the hotel operators, it's not because the hotels are closed down that we're not sort of thinking on how are we going to reopen, how are we going to readapt to this new way of working, of traveling. We're thinking again about all this sort of new technology, because we're so far behind when it comes to new technology in hotels. I mean, we've been saying that for the past 10 years. Like the check-in, check-out dematerialized. We've been talking about that like for the past 10 years, and we're still not there really in France. Well, I can tell you that it's probably going to take 2-3 months. All the hotel operators are going to be ready to put that in place, I think, in the next months. Because there's really the question of, it's not only the clean and safe issue. Clearly, if you want the tourists to come back, there's going to be the sanitary situation, that's for sure. Okay, but now there's really we need to go much forward, much further when it comes to development of new technology in hotels. Definitely.
Yeah. Yeah, so maybe it would be my last question. When do you gonna close your next deal?
Well, actually, we have one deal which we're waiting to close in Southern Europe. For all sorts of technical reasons, we weren't able to close before lockdown. So clearly, we're waiting for the borders to reopen and the hotel to reopen for, you know, at least 3-4 weeks to be able to close that deal. So we've postponed, but we haven't cancelled anything which was on the books. Okay. Now, when it comes to new hotel investments, I'm not sure. I mean, we're still active. We're still looking at a couple of transactions all through Europe. But I think you were talking about repricing, premium, yields, etc. We're very cautious when it comes to the repricing of assets. There are a couple of assets we were looking at before the lockdown. I'm not sure we would be able to move forward at the same pricing today. I'm not talking about the hotels that we were about to close. I'm talking about new deals that we were looking at. So we're still active, but I think there's a real repricing issue. And I still think that there will be a premium to quality, a premium to location. But there's one thing which we need to keep in mind is that the hotel investors will be seeking for a premium in terms of yield and total returns. And that I think we're going to have to come back to the type of yields and returns that investors were expecting on that asset class in the last 3-4 years. We saw a huge drop in the yields in the last few months. But I'm not sure that on the long run, this will be able to continue in that trend.
That makes sense. Johanna, thank you very much for answering those questions. I know that there is no clear or easy answer at this stage of the situation. So thank you very much to share your first thought about the situation. Good luck with the reopening of the office and the business and everything. And let's cross finger that everything will go smooth, at least on the virus side, so we can take our part of the challenge on the business side. Thank you very much, Johanna.
Thank you.